Really quick, I'm in the car. I gotta go to a meeting. I did a video for the group yesterday, and I talked about, I'll share it with you guys now, but I talked about how when you have a big sell-off in the market, you get a steep drop-off, and then you hit a floor, a hard floor, right? Not a soft floor where it stops, keeps going down, stops, keeps going down, where you have a single red candle, a dump across the market, everything just settles, and then we start moving back up instantaneously. When that happens, forget about TA, forget about fundamentals. The reason I talk about 4 data sets: technicals, fundamentals, market psychology, and people. Those are the 4 data sets I use in my analyses when I'm trying to model what I anticipate happening in the future. Market psychology is key. So from a market psychological perspective, looking at that event, you can see 2 different types of events, and in the case of what we're seeing here, we see that hard floor. When you get a hard floor like that, it's very common to get a strong bounce back. And if you can spot the plays that are low risk and have a strong potential play primed, where you have the current price and then a strong support, potentially the support where we bottomed on that drop, and then we have a potential big run back up, those are the ideal entries. So I was able to find a few really low risk plays, one of which was Knowles, which utterly exploded, and a lot of guys in the group made a ton of money on it, including myself. So that worked out very well. I just want to let everybody know, overall, this is a great time to get into the market. When you have a sell-off, one of the best things you could have is a bullish uptrend with a brief bearish moment of a quick sell-off, because that means you're going to continue that uptrend and get better entries so you can buy back in at lower prices. Lastly, I would say with my risk management strategy, the reason why risk is so crucial, it's so crucial to manage risk rather, is what I essentially did. I got stopped out on my trades. I was either at profit or I was completely risk-free in my trades. I think I lost 2.5% on one of my open trades. Everything else closed, right? I got stopped out of everything. And then I had all this capital that I was able to inject back into the market at a lower price. So I ended up profiting from the sell-off. I didn't have to short. Essentially, I shorted my own stuff. I talk about one of my techniques, which is personal asset shorting. What happened was, by getting stopped out at a higher price and buying back at a lower price, I am short selling my own personal assets. So I'm not trading on margin and borrowing from an exchange. So there's a lot of ways to make money even when the market does drop, is my point. And managing risk is pretty much the key to all of it. So make sure you work on your risk management skills. There's a lot of tools you can use that can help make you money in the long run. So that's it. Trade safe.